OK, well, we're going to discuss the Fed later on, but we're going to start what's happening actually over there in China. Does this property price fall surprise you, or is it just something which can be managed given the amount of, well, curbs that can be removed?
It doesn't surprise me. I mean, what maybe is a surprise is it's speeding up. I think we're now having a record sort of year-on-year decline in property prices, and pretty well every
But
city.
on a month-on-month basis, it's not that.
Month-on-month, it's not big, but the cumulative effect of that now over the past few months is starting to build up. And what it does mean is it's a problem for property companies and for the economy overall, because if you add in all the real estate-related sectors, you're getting up to almost a quarter of Chinese GDP. So this will start to have an effect on the ability of China to meet that 7% growth target. It puts it further away. And also there's problems, I think, for property companies in terms of financing. I mean, this is a problem we're seeing around the world. There is too much debt everywhere, including in China. There's been
the household debt is not a problem. It's that local government debt.
In China, it's in a different place. Yeah. It's in local governments. It's in the shadow banking sort of system. But there is a lot of dollar-denominated debt in China, which isn't matched up with earnings that are in dollars. So, you know, the strong US dollar is a problem for some Chinese companies, just in the same way it is for companies in other emerging markets around the world.
You say China's in a bind in your latest research. Why?
Well, I think, you know, ideally, I mean, the peg to the US dollar is causing it problems, you know, as other currencies around the region are being devalued. The Japanese yen, the Korean
we've seen
won.
it weaken, we've seen it appreciate. It's kind of like almost reaching some sort of equilibrium, surely.
Well, I think they would love to devalue, but the problem is if they were to go and devalue aggressively, we would see an increase in acceleration in the capital outflows, which clearly the authorities don't want, and they want to be able to manage that. But at the same time, if they don't try and manage some sort of devaluation, that's going to hit the economy harder and make it harder for them to achieve that 7% sort of target. So they're really caught at the moment between a rock and a hard place.